Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist, Bob Kinane. Welcome, Bob.
Thanks, Sinead.
Bob, we saw markets rebound in January from the sharp falls that we'd seen in the fourth quarter of 2018. What was the rationale for this?
Well, there were a couple of factors that were more encouraging. Firstly, the American Central Bank indicated that it would be more patient in terms of raising interest rates in the United States. So that was seen as a positive. We also saw some very strong corporate earnings in the United States. So plus 12% annual growth for the year to December of last year. So that was taken as encouraging. Against that, some of the key concerns in terms of global trade, as you know, the trade friction between China and the United States. There were some soothing comments from both sides indicating they were making progress on the negotiations. So that also helped markets.
Now, Australian shares lagged other global share markets. Was there a reason behind that?
Well, our share market has been a little bit disappointing over the past year or so compared to Wall Street, if you think of it that way. A couple of factors held back our market. The Royal Commission, the scrutiny into financial system misconduct, that's held back bank shares in particular, so the bank sector was flat in January. There's also concerns about a slowing Australian economy. So what we're seeing in terms of retail spending, car sales, residential building approvals, all indicate that the Australian consumer is not doing as well as could be. So from that point of view, the Australian share market has been held back.
So Bob, one of the things that we did see in January was global property securities performed quite well, up 10% for the year. Was that because interest rates are not expected to rise as much as previously anticipated?
Yes, so those comments from the Federal Reserve indicating interest rates are on hold, that's very helpful for property securities in particular. We've also seen bond yields move lower over the past 3 to 4 months, basically on the view that global inflation pressures are quite mild at the moment, so therefore central banks around the world don't have to aggressively raise interest rates over coming years. So they've taken that as a key positive.
Okay. The other thing that was quite marked in January was oil prices up 20%. What was the reason behind that?
Well, if you look back over the past year, oil prices had dramatically fallen. And what we're seeing from OPEC, in particular the oil-producing nations, Saudi Arabia and the like, they've announced production cuts. Similar story with Russia, so they've followed suit. So that's a restriction on supply of oil. We've also had concerns about Venezuela, which is a major oil producer. So those sort of supply concerns have lifted the oil price.
Finally, Bob, the Australian dollar was up 3% in January. What was the reason behind that?
Well, the Australian dollar has basically improved on the basis of the American Central Bank holding interest rates steady. It's also seen a lift in commodity prices because we've seen a situation with Brazil. One of their major iron ore producers, Vale, has had a dam collapse. So that's cut iron ore supply. That's also helped the Australian dollar.
Thanks for your time, Bob.
Thanks, Sinead.
And thank you for joining us.